What up, what up? Zach Bradshaw, long-winded guy. Back to talk about some charts. Damn, just realized I'm actually wearing an NC State shirt on camera. Ignore that. Pretend like you never saw such a thing. Now, over this weekend, um, there was a chance in my eyes that Bitcoin would break out of this range. And in one of the last videos, I think it was probably 2 videos ago, I started to lay out I laid out a bunch of different price levels, and I started to lay out like a wedge that looked something like this as the chart was forming. Um, Over the course of this weekend, I saw other patterns come up. I saw this pattern kind of get resolved or broken, I guess is the better way to think about it. Um, and it's kind of what I was anticipating. I'm still not, I'm making these videos so I can figure out what these instincts that I'm developing are. But it seemed too soon, right? So this thing comes all the way down here, loses 25% or loses 30%, 40 to 30, loses 25%, and then creates a base down here and very quickly breaks back up towards the top of the range, which in a couple of videos ago, you'll see that I played a trade here from like 34 all the way up to 38 and 39, where my sells were. But even though this was like extremely powerful, it just did not seem like this was the time to break it. And for it to come down and base back up quickly, it would have had to stop maybe on these moving averages or something like that. So that how can I fix this so it's not? So the time has gone well beyond that, and I just wanted to show you how that worked out. But what's a way to do this? Zoom in, like, oh yeah, yeah, duh. So it powered its way back up here, and then fell down like as quickly as it went up. Didn't fall down as far, and started to create another higher low base, right? So we have a lower high here and higher lows, higher lows, higher lows. So we are forming a wedge. This one's not symmetrical, so it's really ugly, which is one of the reasons I was like, oh, this one might not play out, which I don't know if that's a accurate way to thinking about trading. It's like, oh, I don't like the way my pattern works. It's not going to work. But that's what I was thinking, and I ended up being right. So over the weekend, I stopped. I mean, I was still looking at that range, but it looked at a certain point that maybe there was a descending triangle forming up, which could have potentially. And again, I'm no master of measured moves, but this formation could have potentially initiated a target back down here to this base at 30, right? So if that happens, this could form a greater descending triangle that could be more devastating with a lower target down here into 24 or 23 or something like that. But that ended up not happening. I didn't make any plays based on this triangle here. And I looked at it as like, okay, there could be a fake out bounce and maybe I'll be able to catch it. So you see some of my price levels in here that I had already. And as this formed, again, I didn't make a play off of it, but I was ready to like, okay, well, this triangle may not actually initiate that move all the way down to 30, but people may give up on it or think that it has gone and it's going to go down, and then I might be able to get something at 32, which it's breaking this wedge pattern, right? The more that this comes down and gets below this line, the more that pattern breaks. But now, after being patient, seeing the weekend, and then this morning, I actually had another level that was so I had a price alert for breaking somewhere in here. Probably would have been this high right here. No, it was overnight. So I guess I had one right here. I guess I had a price alert here. Well, let's just go see where my price alert was. Rise above 36.9. Yeah, that looks about right. Yep, rises above 36.9. The tip of this wick looks like where I had it. And so within this hour, while I was making coffee and bacon, I heard this pop and said, okay, time to make another video. I'm not sure that this is going to resolve itself anytime soon, but I did want to point out these different patterns on the chart, and it could be, again, I'm no master of measured moves, but it could be that from here, this breaking out initiates a target back up here to this 39, which does sound about right. And once it gets up here, it could sell off from this area again like it did up here. Then maybe come up with another high in around 38 at the top of this base, or maybe all the way down here at the top of this base. Whatever the case may be, I have no idea what the chart's going to do. But I am thinking out the patterns, which really represent algorithmic bots trading against each other, and a little bit of retail sentiment, guys like me, mixed in there. And that's why these patterns form. There's bots that are trading at, let's say, this slope or this rate, and then there's other bots that are trading at an opposite slope or rate. And so you get some of these patterns like this, where it's the sellers are slowly going down, the buyers are quickly moving up, right? Eventually, the pattern can get broken, and you have to form a new one. And so now this one looks much more accurate than either one of these two before it. This descending triangle wasn't that great because this one broke below it. And moving it down here kind of makes it, actually it kind of looks better if I would have had it down here. But see, it still breaks. So this is not a very good descending triangle, though it was showing. And this was not a great wedge, though it is showing. Funny thing about this one is that now that this is played out and this wedge is broken, if this wedge was really breaking, then I would do some other measured move or something. Like, I wouldn't do the measured move. I'd just play it and watch where it ends up. I'm not so worried about predicting where it ends up. But if this were to play out, it would bring us all the way down here to 28. It didn't do that, and now is back above these moving averages, so I don't think it's going to. So I think it becomes much more accurate to do this, which is what you see over here on this chart. So within the course of this wedge, oops, I actually wanted to illustrate that real quick. So this one broke, but then it also became a testing area here. It was a breakdown point. Like, once we had a close below this line, we had a nice, looks like a $1,500 fall, maybe almost a $2,000 fall, which is a buying opportunity potentially on these shorter term time frames. And then as it bases up, it's already come off of that line and sold off once for another $2,000 or something. Then it's come up here again, and I think it's probably going to break it maybe in the next 2 or 3 candles to get back into this. But it's not really breaking anything. It's really just playing out in this range, and we'll see where it goes from here. But because this is, the longer that this goes and doesn't actually do anything like a descending triangle or whatever, the longer this goes, the more likely this is to continue in the upside, and the longer it goes, the more likely it's going to continue in the upside more dramatically. So because it's made it all the way into this week, I'm seeing 60,000, 50,000, 60,000, coming up on the horizon, at least for the way that I think about the charts. And this is looking like a healthy consolidation at the top of the price range, which consolidation at the top of the price range, consolidation, it's figuring out this price in here. The consolidation at the top of the range usually means further continuation. So, if we would have had a descending triangle form, and then it would have come down here and it would have played in this area, had a harder time getting back up, then that would look like a consolidation at the bottom side of the range, because our full range is all the way down here at 30,000. And as things stand, it's kind of doing it in the middle of this 1 hour range. But the reason I say it's at the top of the range is actually because I'm looking at a 1 hour chart, which I don't really trade on the 1 hour chart. I look at it a lot, but when you zoom out, it becomes much more obvious. And you know what? We can even go lower, or higher, I should say. So if you look at this massive run up, the highest prices that Bitcoin's ever had, at the top of this range here, right? So we have a, let's say from this point, we have a 250% move from 12,000 in like 12 weeks. What is this? This is insane. But as this moves up, it's still retaining more than the top half of it. I guess the percentage thing was not the very best tool for me to use. But you see that, like, if you look at this as an entire range, it's over the last 2 weeks has been higher and higher in how low that it goes. And so it's consolidating at the top of the range. If it continues to do this, this may get smaller and smaller and then break out, or we might be breaking out in the next like 2 or 3 days. Not, I'm not Miss Cleo. Don't follow my trading. This is not trading advice, financial advice, or anything like that. I'm not a financial advisor. Don't get me in trouble. You can follow my trades if you want to, but this is a series for me to learn and to also teach a few people on my team in my way so that I can say, hey, I'm in a business meeting. Can you go sell a piece of that position so I can cash in as profit? This is still in development, but that's it for this one. So I just want to show how pattern trading is not an exact science. And now that I'm seeing this a little bit more, you might even have a more accurate or better wedge that you can create with some different lines. And so hopefully that shows you, and I really like how this is matching up with this down here, so I'll probably keep this one. But it's just to show you that when you're looking at patterns and pattern trading, it's not an end-all be-all. You have to really pay attention to the patterns and use them maybe to shift your bias and say, okay, well, I think it's probably going this way. I think it's going this way. It could do this or it could do that. But don't look at them like, ooh, ascending triangle, it's going up. Ooh, descending triangle, it's going down. It's, oh, well, that's an interesting signal. Let's, make contingency plans depending on which direction it chooses. So anybody watching this, let me know if you have any questions. I'll try my best to answer them. In the meantime, you can check out planmarkets.com or one of the investing pages or something like that on my site that I saw or that I showed in one of the last videos. Other than that, buy you some Bitcoin yesterday. I mean, just from a long-term investing perspective, I think this thing is going much higher, and the best time to have bought it was yesterday, so that you're not FOMOing in when everybody else is like, oh my gosh, this price is going crazy, and now you go and buy some at 20,000 like you did here. Now, hopefully that isn't confusing you against you should buy the all-time high thing here. Right now, we're below the all-time high. It's not the best time to buy. Once it breaks above 42, probably a good time to buy the all-time high again. But buying the top of the range is more what I would consider this, and that's not always the best thing. Now, maybe you buy on a breakout of this wedge, though wedge is not that strong of a pattern to be doing something like that. Maybe you buy down here on the bottom side of the wedge, though you see that the wedge is very shiftable. It could end up like that with another test down here. So you can't, when you're trading based off of patterns, you cannot take it as the gospel, but you can use them to, like I said, formulate your hypothesis and create contingency plans based on what you think is going to happen, or what the charts are telling you could happen is a better way to think about it, because no Miss Cleo stuff here. Let me know if you have any questions on this. Thanks for watching my silly little trading videos, and